Why is Bitcoin thriving while traditional markets are in chaos? Since January 2024, we've witnessed unprecedented market behavior that defies conventional wisdom. Today we're joined by James Check, the lead on-chain analyst at Glassnode, whose deep understanding of Bitcoin's market dynamics has earned him recognition across the industry. In today's discussion, we'll examine three central points: the impact of new presidential policies on market uncertainty, the unusual bond market behavior creating systemic pressure, and Bitcoin's remarkable stability despite these challenges. Before we continue, if you enjoyed these breakdowns, hit the like and subscribe button for more TFTC content. Full episode linked below. Stay until the end to understand why this period might mark a fundamental shift in how Bitcoin responds to political uncertainty. First, let's dive into James's analysis of how the new presidency is reshaping market dynamics.
Yeah, it's a strange one. So I did a slide deck for our subscribers back in December. And part of that thesis was, I think it's going to be a choppy Q1. There's a whole lot of things going on, but bond yields are trading higher on the long end, which all things being equal should be a drain on liquidity, because if your bond yields are going up, the price is going down. And if the price of the foundation of your financial system is going down, that's going to be a drain on liquidity. Plus, it lifts the benchmark interest rate for everything. So the long end selling off should be a constraint. The dollar's been really strong, which also should be a constraint because the rest of the world's going to have a harder time paying back their debts, and it's effectively devaluing. I mean, the Australian dollar, if you want to look at a shitcoin chart, go and look at the Australian dollar. It's getting absolutely pummeled. So all of this is a net drain on liquidity, and yet gold and Bitcoin are doing really well. And I mean, rarely do I say go down and look at the Bitcoin price on like the hourly chart, but look at the last like 2 weeks on the hourly chart. It's chaos. It's up, down, left, right. It's all over the place. So that's very political, right? So my thesis was that I think Q1 is going to be very choppy. And the reason is the world's got to adjust to a new presidency. It's very different to the old presidency, and the policies are going to be quite significant.
James's December prediction about market choppiness in early 2024 is proving remarkably accurate, and his explanation helps us understand why Bitcoin is behaving differently than expected during this period of political transition. He identifies several key factors that traditionally would create downward pressure on risk assets like Bitcoin. The rising bond yields are particularly significant. Think of them as the foundation of the financial system. When these yields increase, it typically acts like a vacuum, pulling investment money away from other assets as investors seek the safety of government bonds. This effect is amplified by the unusually strong US dollar, which is creating a cascade of problems for other countries trying to manage their debt obligations. The strong dollar typically signals investors seeking safety, which historically hasn't been favorable for Bitcoin. But here's where things get really interesting. Despite these traditional market headwinds, both Bitcoin and gold are showing remarkable strength. James attributes this unusual behavior to the unique political environment we're experiencing, specifically the transition to a new presidency with significantly different economic policies. This creates what he describes as choppy markets, periods of increased volatility as investors attempt to navigate the uncertainty of new policies. This directly supports our first argument about how new presidential policies are creating market uncertainty, but remarkably, this uncertainty isn't negatively impacting Bitcoin in the way many would expect. The relationship between political uncertainty and market behavior gets even more fascinating when we look at what's happening with the Federal Reserve and the bond market. And this unexpected dynamic is reshaping how we think about Bitcoin's role in the financial system.
It is. And if, again, I haven't been around in markets long enough to have the first-hand experience, but as far as I'm aware, this doesn't happen often, where you have the Fed cutting rates. Usually the whole treasury curve should come down in rates, but we're actually seeing the bond market just go, nah. So this is like bond vigilante type material where they're like, no, we're calling bullshit. Whether it's inflation, whether it's just the knowledge that at the moment, the US has been basically issuing short-term debt. Yellen kind of pulled this trick where if you issue all this short-term debt, you can get money out of the reverse repo facility. So post-COVID, there's what, $2.5 trillion or something in there. By issuing short-term treasury bills, you could essentially extract that money back out into the economy. Now, that's more or less drained. The reverse repos more or less, been depleted. And if you think about what short-term treasuries are, I mean, it's kind of payday lending in a way for governments. You can't do that forever, right? Because the interest rates are going to be higher, and eventually they've got to term this stuff out.
What James is describing here is a crucial breakdown in the traditional relationship between the Federal Reserve and the bond market that perfectly illustrates our second argument about conflicting market pressures. Typically, when the Fed cuts interest rates, bond yields follow suit and move lower. It's like a well-choreographed dance that market participants have come to expect. But something unusual is happening. The bond market is essentially calling the Fed's bluff, suggesting they don't believe current monetary policy is sustainable. James uses a powerful analogy, comparing recent government debt management to payday lending, a comparison that helps us understand the precarious nature of current policy. The Treasury has been heavily reliant on short-term debt, essentially taking out a series of small, quick loans instead of securing longer-term financing. Everyone knows about Fold. It's the app where you can earn the most Bitcoin rewards for everyday purchases. Fold now lets you double stack rewards with gift cards. Use your credit or debit card to buy gift cards and earn both credit card rewards and sats. Fold gift cards help you grow your stack with every purchase. If you're not shopping with Fold gift cards, you're leaving sats on the table. Get a 20,000 sat welcome bonus. Go sign up now at foldapp.com/Marty. They've been utilizing the reverse repo facility. Think of this as a government savings account that they've been steadily depleting. Just like with payday loans, this strategy isn't sustainable long-term, and the bond market's reaction suggests we're approaching a critical juncture. This creates systemic pressure across the entire financial system as bond market stress inevitably impacts other markets. However, this dynamic actually helps explain why Bitcoin has remained resilient. Investors are increasingly viewing it as an alternative to traditional financial assets during this period of unusual market behavior. The combination of political uncertainty and these market pressures creates exactly the kind of choppy environment James predicted, but importantly, it hasn't derailed Bitcoin's overall upward trajectory. This brings us to perhaps the most compelling part of our analysis: how Bitcoin's price behavior during this period of uncertainty differs dramatically from previous cycles and what this tells us about its maturing role in the financial system.
And mine's that one where you look at like the index price, you put everything from the cycle low. This current cycle is word for word doing exactly the same thing that 2016 and 17 did. And there's a lot of parallels actually between those two cycles, very spot driven with the ETFs. And back then we didn't really have derivatives. There's a lot of similarities. It's amazing to me that we're following that path. I don't know if we will follow that path on the right-hand side of the chart, but we certainly have on the left-hand side. And if you just kind of frame it up from that perspective, really stable, really healthy, don't get caught up in the noise because it's a really, really robust uptrend. We've barely had a 25% correction this whole time, right? We went down 32% back in August last year, and it was for 3 hours. That's the worst it's been. Go back to any previous bull market, you're down 35, down 40, down 50 on a regular basis.
The stability James is highlighting here represents a remarkable evolution in Bitcoin's market behavior that perfectly validates our third argument about Bitcoin maintaining a strong upward trajectory despite market volatility. When you compare this cycle to Bitcoin's historical patterns, the contrast is striking. In previous bull markets, Bitcoin price movements were like a roller coaster. Dramatic drops of 35%, 40%, or even 50% were commonplace and expected. These kinds of swings would typically send traditional investors running for the exits. But what we're seeing now tells a completely different story. In this cycle, the largest correction has been just 32%, and remarkably, it only lasted for 3 hours. This unprecedented stability, combined with what James describes as a stair-stepping pattern upward, isn't just a statistical anomaly, it's evidence of a maturing asset class. What makes this particularly significant is that this stability is occurring during one of the most uncertain political and economic environments we've seen in recent years. This directly challenges the traditional narrative about Bitcoin being primarily a vehicle for speculation. The parallel James draws to 2016 to 2017 is especially revealing because it helps us understand how the market has evolved. Back then, Bitcoin's price movement was primarily driven by direct spot market buying, individual investors purchasing Bitcoin. Today, we're seeing a similar pattern, but with a crucial difference. We now have a much more sophisticated market infrastructure, including institutional-grade ETFs and professional trading venues. This maturation of market structure helps explain why Bitcoin can maintain stability even as traditional markets grapple with political uncertainty and conflicting economic pressures. When you combine these three elements we've discussed, the political uncertainty creating market choppiness, the unusual behavior in traditional financial markets, and Bitcoin's surprising stability, we get a clear picture of an asset that's not just surviving, but thriving in an environment that would typically be challenging for any investment. This stability in the face of macro uncertainty doesn't just suggest Bitcoin is resilient. It indicates that Bitcoin might be emerging as exactly the type of asset investors need during periods of political and economic uncertainty. Will Bitcoin's stability during political chaos continue through 2024? Let me know in the comments. I read every single one. And if you found this political analysis interesting, you'll want to watch our breakdown of Bitcoin's trillion-dollar market separation. Click the video on your screen now. Don't forget to like and subscribe for more daily content. Thanks for watching. Stay humble. Stack sats.